This is Victor. I'm here with a new video. Now we are going to make a look to the annual report of Games Workshop and see how the company is doing. So I'm curious to follow up because there is a lot of talks and always a lot of I think communication or wrong communication around that. And I prefer always to use the official records from the company, the official report, and talk about that and see how I see the company. So based on, I'm not a finance expert. I have some experience. I'm quite used to these numbers because of my work, but I'm not expert here. So I will just go very top line what I see here and what we can expect. So this is the one that was released in 26 July 2022. And here you can see, and it's nice that we always have the comparison. Remember, last year was the best year ever. And now we're going to see how they are doing versus the best year ever, right? That was the last one. So if we go in core revenue, we see that it have grown. Okay, it grows about 35 million. Okay, you can see here from 353 to 386, and we can see that of this growth, 12 million is on licensing revenues. This means that is video games or other type of things. I don't know if the films are going to be here. To be fair, we don't know what Warhammer Plus is over all this, so we don't know where is Warhammer Plus in all these numbers. But this is mainly video games. Okay, so I will say this is mainly video games because the board games are not licensed anymore, if I'm not wrong. So yeah, you can see that the license in video games have grown quite substantially. They have growth about 12 million over 16. Is a growth of about 75%, something like that versus previous year. It's quite a big growth. Okay, if we see the core revenue is not bad. So if we go to the core, the core revenue is not bad. Sorry, the full revenue is the one at the bottom. So the core revenue have growth 35. No, yes, about 35. So they have growth double digit or around double digit. They have growth about 10%. That is not bad neither. So the revenue have growth. So the company is selling more or is selling more money. Okay, and they are licensing more. But the other thing that we have to look is the operating profit. And I like here we have as well the core operating profit, the licensing operating profit, and the overall operating profit. And you see, although they have sold more, right, 10% more than previous year, the operating profit the core operating profit have been decreased about 5 million. Okay, so from 136 to 131. Is this bad? So I don't think it's too bad. Yeah, we are talking 5 million over 130. It's less than 5%. I will guess it's about 4% decrease. So they are at index 96. The problem is why this happened. So meaning that they are making less money for the revenue they are generating. Okay, so the sales they are doing are less profitable. So and this can be we are going to see this in all companies. This will happen to all companies in the world, and this is a very big problem in the global economics. So we have seen a big growth on commodities. There is a big growth, so the cost of the energy have increased a lot. There is an increase of cost in the commodities. There is increase of cost in transport, and on top they are in UK. So if they are selling to Europe, they have to pay for Brexit. All this makes that the gross margin is being reduced, even if they have increased the cost of the retail cost of the miniatures, is not compensating all the additional costs they have on all the other expenses, right? As well as inventory. They told later on that the inventory is also a big hard for them. On the other side, you can see the operating profit of licensing, have increased in the same proportion that have increased the revenue. It's quite a clean. So the licensing is clean. There is not commodities of well linked to that, right? So the licensing is clean money normally. You only need to pay taxes, and that's all. And then you have the overall operating profit is here. So overall, they have increased operating profit, but I have to say, is they have decreased on the core, they have increased on the licensing, and this is why they have overall an increase. Um, what this means? This means that they will need to normally in big companies they look this top line they have growth, so this is good. Bottom line they have a worse gross margin and they have decreased the operating profit. Mean that the company will look for a way to in a way they will try to look how they can com they will look for savings and most likely they can look for pricing at the end of the year or during the year to compensate this increase in commodities and the increased cost of the fuel. And let's see, because the fuel does not look that will go down. I'm going to say fuel, I mean also energy. So, and the gas in Europe is not looking good for the next years, neither, and then neither the electricity, because the gas and the electricity in Europe is quite linked to each other. Earnings per share, and this is important point. So you can see the investors have win more money. So dividends per share paid in the period you can see is 285 points. It's what so this is a good news for the people investing. I know that the shares have decreased, but also it's important to know how much dividends you win per share, and this is also important thing to take into account. So overall, it has been a good year for Games Workshop. The only thing is that they have lost operating profit in the core business, and most likely they will look for ways to compensate that. And this can be different ways. They can reduce inventory, they can streamline the transport, they can streamline what the manufacturing process, or they can increase the retail price of the miniatures. Okay. So let's make a look just what they say in the strategic report. So yeah, it's committed to the continuous development of IP. So they keep very focused on the IP. The first element is that we make high quality miniatures, so and then they understand. So this very similar to what we have seen. The second element is that we make fantasy miniatures or less imaginary, and they keep using their own IP. So they will keep focused on their own IP as we have seen. So there is no big changes. I have not seen any change in their strategy, right? The element is that customer focus. We aim to communicate in open way. This is linked to the Warhammer TV and not just the Warhammer TV, also the Twitch and all the communication and the Warhammer community and so on. What they all say, the fourth element is the global nature of our business. So they aim to go to global, but you can see that the global means Europe and US and a little bit of Asia, China and Japan mainly, right? So this is what means global for Games Workshop normally. And yeah, and the retail channel is supported by our own online stores. This will be, and we will see later on that they will keep growth. So we design and make products under the number of brands and sub-brands, and they keep talking about Age of Sigmar, 40K, and Horus Heresy will be the three big blocks or pillars of the company. Strategies and objectives continued. So this is the say our brands continued. The Warhammer settings are incredible. So it's more about the same. You can download this and read in more detail, but basically there is not big changes versus previous years. They keep focus on their own IP. They keep pushing for the IP, and they keep they will try to push to be efficient in the transport and also inventory, and try to say logistics. Our products are distributed from main warehouse in HQ and our rented warehouse facility approximately 25 minutes away. These facilities supply our two hubs, one in Memphis and Tennessee, and one in Sydney, Australia. Between these four facilities, we are able to directly supply our independent retailers. So they will keep the same strategy, and they will, I guess, they will keep working. And they say they still have the online, retail, and trade. And I'm going to scroll down because I don't want to make this video too long. Yeah, you can split. I just wanted to go top line on what you see here. Just let me, I want to scroll down because it is something that I find interesting as well. When I was looking at the report, as I said, if you have more interested, you can make this look at. And here is the part that I was interested about. So you know that there is a trade, retail, and online. Retail is their own, retail is their own shops. Trade is the um, what's called this is the third shops. Okay, so these are not Games Workshop shops. This is what they trade with other shops, and then there is the online. Okay, and if we look here, we are going to see that trade and retail have growth, but online have decreased in this is revenue. Okay, these revenues by channel. So you can see the online have decreased a little bit. So this is also can explain why the profit have went down a little bit, because online is the most profitable one, is the one that have less cost linked to that. Retail is the next one, okay, and then trade is the part that they in a way they lose less money because they depend on a third party. So you can see that they have shifted some volume. They used to have here 25, so they have shifted 3% from here uh, to their retail, keeping the 55% on trade. Okay, so some of their business have moved to retail, and this in a way makes sense, especially in Europe, where we have the Brexit, and we were not confident how the Brexit will work with all the imported items. So the people did not want to take risk, and most likely they prefer um, to if you shop normally directly to Games Workshop, they prefer to went to the shop at this point. Okay, yeah, you can see as well number of stores. We see that they have both the number of stores in UK. They decrease in North America, but they are more or less not big changes here on number of stores. So four less in North America, three more at the end. They have growth in globally 5 shops. Okay, and what I want to go is that these are the investments. No, I will not go into that. I wanted to see if there was the revenue by channels somewhere, because this is also interesting to see. Because when you see the revenue by channels, you can know. Here is all the investments, so you can see where they have all the assets. Again, nothing special, nothing really interesting to talk about. Consolidated statement changes. So what I wanted to go is here cash flow. No, this is not what I wanted to look. Okay, I think that's all at the end. So I wanted to see if there was the operating profit per channel, but I don't see it. So here we have again what is this is not this is the revenue, so they don't put the operating profit. But here we can see more or less this is the gross profit, and then you can see here these are the costs linked to each one. Okay, you can see the cost linked to online is 11 million, the cost linked to retail is 52 million. So if you make the same money, so you can imagine, so if this is the cost, the operating cost is 11 million, you are doing here 74, right? But here the cost linked to this is 50 million, so you're only going to do 30 something million. So you can see why the operating profit it's very different depending on the channel. You can see the trade is not bad, neither but there is the trade that you have less margin. So this is not explained here because you can see the operating profit at the end. They have done a revenue of 200, no, sorry, 386. At the end, the operating profit is 131, meaning that, yeah, they have to, they was, yeah, you can imagine that all the other things went into cost. So, and yeah, this is just to make explanation. So overall, summarizing this, I think Games Workshop have done a good year. Maybe in terms of revenue, better than previous year. In terms of operating profit, a little bit less, but it's very normal. And I think a lot of companies will suffer the same. Okay, a lot of companies maybe even they will decrease in revenue. So we expect a lot of companies to because the market is shrinking with the cost of the energy, people is buying less. So it's still good that the revenue have increased, and very normal that the operating profit have went down with all the extra costs. So overall, I think. And just before finalizing, I was forgetting to share this. So it's also interesting to see how Gamesworkshop is doing by regions. Okay, they have these regions. They have UK and continental Europe, North America, Australia, New Zealand, Asia, and rest of the world. And then, like library is not real region; is another stage. And they have this for trade and for retail. They have there is UK, continental Europe, North America, and Australia. And then yeah, you have the same online. They have as well the same type of split. But if we look here at the overall how they have worked. So the first thing we can see is that in trade they have growth in all the regions except Asia and rest of the except Asia and mainly. Okay, on retail, they have decreased as well in Australia. So, but they are growing in the three main markets, that is UK, continental Europe, North America, and as well in online is where we see that they have decreased in continental Europe and UK. And why this may happen is because COVID is over. So some people that were used to go to the Games Workshop stores or to the Warhammer stores, they during COVID period they were buying online, and now people is back to the shop. So we can see that they have shift again the numbers. Okay, so the people. So you see here we have decreased about 2 million. These are the 2 million growth there. Here they have decreased about 3 million. There is here they have decreased much more. Okay, so a lot of people is back to the shops, especially here. I guess we also have Warhammer Wall. So this is why we have seen a little bit of reduction in UK and continental Europe, where we have more of the retail shops are quite easier to reach. There are a lot in the main, there, especially in UK, you have retail shops almost in every town. So this is why we see this shift from online to retail. People wants to go back to the shop to play and to use the miniatures. Of course, this makes a lot of sense. And here we have the overall revenue by regions. Okay, you can see UK, continental Europe, and North America have make a big growth, and they have a little bit of decrease in Australia and Asia. Asia is more or less flat, a little bit of reduction, and then rest of the world, I guess, is yeah will be more likely South America, or Latin America and Africa. I don't know exactly where they're selling, but yeah, the increase of prices will hammer a lot these countries that have lower income and less budget, so the people will have a bigger barrier. And yeah, this is all. I think this is all. So I will say overall, good year for good was having a good year for Games Workshop. They have increased in revenue, and I will not surprise if in the following months they will do another increase to compensate for the loss on gross margin or for the loss in operating profit. That's all. So, but I will say, yeah, Games Workshop is growing, and I think it can be, and it impacted like all the other companies by the increase of cost of energy and commodities. That's all for now. So I hope you have enjoyed this video. Please let me know if you see my analysis in a different way. Leave your comments below. Let me know what do you think about what Games Workshop is doing. And as usual, thanks a lot for watching, and see you again later. Bye.